Hi everyone, welcome to this session of Step 2023. We've got Andrew Gazdecki with us, who's the founder and CEO of Acquire.com, not MicroAcquire anymore. It's a marketplace that connects people wanting to sell startups with companies or individuals wanting to buy them. So it's basically a startup M&A marketplace. Thank you so much, Andrew, for taking the time to do this. It's a pleasure to have you with us. How are you doing?
Yeah, Zubair, thanks for having me. Excited to be here.
So tell us a little bit about yourself. People know you because of Acquire.com, formerly MicroAcquire. But tell us a little bit about your journey. How did you get to this point? And, what have been some of the biggest milestones of your career?
Yeah, that's a super broad question, but I'll kind of give you the 2 minute sort of version. So I can give a 30 or 60 minute version, but I've kind of been an entrepreneur my whole life. I was that typical kid selling stuff on eBay when I was 13 or selling baseball cards when people were collecting them. My first real venture that I built was a SaaS business called Business Apps. I started that in college, bootstrapped that to about a little over 10 million in annual recurring revenue, and it was acquired when I was 29, which is pretty cool. And then I built a crypto protocol company after that. I don't know why I should have taken a break, but that company was acquired by a firm called Bank to the Future. And then now I help other startups find exits and acquisitions.
Right. So why did you decide to do Acquire.com? What were some of the problems you saw in the market? Because, you were somebody who had sold, their own business. So you must have encountered some problems while doing that. And I'm assuming, that's what led to uh, then the starting of Acquire.com.
Yeah, good question. It was a few things. The first kind of light bulb moment was when Business Apps was acquired, and it's spelled incorrectly. It's spelled BIZNESS apps. It's still alive if anyone
Right.
wants it. It's like a drag and drop mobile app builder. But, anyways, when that company was acquired, I had more people than I could count reach out to me and ask me simple questions such as, how'd you find the buyer? What are the legal steps? What was the value? Like due diligence, all of these parts of an acquisition that to me, I kind of understood but it really kind of opened my eyes that, as entrepreneurs, there's books on marketing, there's books on sales, there's books on product development, fundraising, literally everything but, the exit. And so I just thought there was a huge void in the market in terms of, there needs to be an easier way to facilitate these acquisitions because it's arguably the most important part of the founder's journey is, getting acquired. So that was the first part. The second part was, it's a really fragmented market in terms of who are the buyers, what do you need to do to prepare your startup to get acquired, and so just kind of bringing all that together in one place just made a lot of sense to me. So, in another sense, what I'm trying to say is, I just felt the startup ecosystem needed something like Acquire.com to exist. So I built it.
Right, right. Now, marketplaces that enable the sale of internet businesses have existed for a long time. When you started MicroAcquire, you started with a different model, where you don't charge uh, the seller anything at all. The buyer pays a subscription fee. What was the main reason for doing that, and how that model has, contributed to the success of what your business has become today?
Yeah, good question. So when I looked in the market, I tried to do everything completely opposite of other options to sell your business. And one of the key kind of values that we have at acquire.com is, we want to put the founder first. So we want to put the founder in the best position, be the most attractive option for them to sell their business. And having no commissions made a lot of sense. It just You can list your business, we charge the buyers, and then instead of paying, a business broker 10 to 15%, you can save that and we'll just charge the buyer for access to contact you and learn about your business and start negotiations. But I will note that we will be implementing commissions pretty soon here. So that is part of the plan. But initially, launching a business like a marketplace, you want to get as many people in as quickly as possible. It's kind of like you're throwing a big event. And so having a value prop like that and helping startups get acquired without any sort of commission has been a big part of our growth strategy. But when we do implement commissions, we're going to do it in a way where we add value to the acquisition. And so there's always going to be a free tier of micro acquire.com. I gotta get used to saying the new company name, but um, we want to make sure that when we do capture commissions, we're earning them and we're not just saying, "Hey, you listed on our marketplace, please give us commission," or something like that. We want to say, "Hey, we were able to increase, the sale of your business by XYZ%, to justify, that commission."
Right, right, right. Yeah, that makes a lot of sense. You've touched upon it that this part having no commissions in the beginning contributed to the early success of the business. But usually marketplaces always struggle with the chicken and egg problem. So how did you get those first users? How did you convince people to list their online businesses or whatever type of businesses they wanted to sell on acquire.com in the early days? How did you get those first 10, 15 users? What was your pitch?
Yeah, good question. It was kind of a little bit of everything. So I have a pretty decent sales and marketing background. So ran like a big cold outbound email campaign, uh, both to buyers and startups, just asking, if they wanted to buy or sell a startup. Got on the phone a lot, talked to a lot of different buyers. I think that was probably the most critical part, was actually scheduling calls with startups. Because when you first start any sort of business, there's something that you need to, close, which they call the credibility gap. No one trusts you. No one knows your brand. So why are they going to list a startup on your marketplace? There's no trust built there yet. You haven't proven yourself. So building those early relationships one to one, I think, is really crucial. So I focused a lot on. I probably did like 200 calls, like a lot,
Right,
because they were fun calls because they were with startups. I love startups. Meeting just the different types of buyers was very interesting, and that really helped inform product decisions and marketing strategies and stuff like that. So short answer, just you know kind of just talk to a lot of different customers.
right. And how long did it take to actually make the first exit happen on MicroAcquire? I mean, when it was MicroAcquire, and do you remember, the company that got acquired? That was the first company that got acquired on the website.
I do. Yeah, it's hard to forget your first customer, your first, in this case, acquisition, if you will. And I can't say the name of the company because
Sure.
everything on microacquire or acquire.com, excuse me, is private. But yeah, I remember it was, I think, probably about a month after launch, because there's
Oh
a
wow.
period where, buyers have to discover the startup, go through due diligence, closing, and then it's acquired. But it happened quickly, and it was kind of to my surprise. And when it happened, we weren't charging buyers. We didn't have any revenue model. It was really just me running the whole thing. I was doing all
Right,
customer support, all product management, all marketing, vetting the listings, speaking with sellers, marketing the startups that were listed on the marketplace. So it was just kind of like almost like a side project at that point.
right,
And then it just quickly kind of took off from there at a pace that I had not expected.
right. And for how long it was only you? I mean, when did you hire your first employee?
Good question. For the first year, I'd say it was me, just me. And I don't recommend that. I recommend get a co-founder, find someone to complement your skill sets. But for this business, it was just so much fun to run. It was really easy to get up in the morning and kind of put in, some pretty long days if needed. Because when you have to kind of do all support plus marketing plus product development plus just general admin stuff like that. It's a lot of time. So my first hire was just someone to help with customer support, and then also when startups come into acquire.com, we vet and review every listing. So we'll improve the profile. We'll verify certain pieces of information for security, like their identity. And so yeah, about a year. I wish I did it sooner. I'll say that.
Right. Okay. So that's one of the mistakes you made early on. In spite of being a second time founder. But what are some of the other mistakes, big mistakes you made early on in case of microacquire? You had done a business before and you'd sold it. I mean, so one would assume that you would not make as many mistakes as first time founders. But I mean, you would still have made some. So what were some of the classic ones?
Yeah, good question. I wouldn't say hiring a person a year into the business was a mistake. I think it was kind of a blessing in disguise, if you will. I
Right.
just
Okay.
I just I just enjoyed the business so much, and the longer I was in those roles, the more I
Right.
could understand them and optimize them, and then build the processes. So it's also important not to hire too early, because then
Sure.
you might not have the best grasp on who's ideal for this role that you're hiring for. But if I look at mistakes I've made with acquires so far, um, nothing really too glaring. If I'm being honest, I would say, um, I think I'll say the mistakes I made in my first startup, and these are the ones that kind of I have a little bit of scar tissue, if you will, and so that's just the ones that. So I told myself with this new business as my third startup, I wasn't going to make these mistakes. And the biggest mistakes I've made building businesses. The first one is not hiring people smarter than me. When they're needed in the business. And so at business apps, for example, I manage marketing and product for way too long. I should have hired people smarter than me, more experienced than me. I was very young. I was 22, 23, no previous experience. So with MicroAcquire, once we started to hire, I built out, I guess you could call like a founding team pretty early. So I brought on, a VP of product, VP of engineering, COO, and a few other different key roles that I knew were just maybe not necessary at that time, but to really grow the business and accelerate the growth of the business, they would be required. And then number two would be marketing attribution. At my other startups, there had been some moments where just not tracking the ROI on certain marketing campaigns. That was a big mistake I'd made in the past. Um, those are the top two that come to mind, and then also not having a big focus on um, building the product correctly in terms of infrastructure from the start. And I say that because at my first startup we had to do a full rewrite because we just kind of had spaghetti code and there's bugs
Right.
everywhere.
Right.
We weren't thinking about scale, and so for this one, and I don't recommend this all the time because sometimes it's not necessary, but I made sure to use certain coding languages that I think would scale over time.
Right, right, right. Yeah, one of the arguments that I see people making a lot of the times is that you should not worry too much about your code in the beginning. I mean, just go for whatever gets you to the product, and you can deal with all these things later. And on the other side of the argument, there are people who say that you should build for scale. From maybe day one if you're thinking big. So there are obviously both two sides. I mean for and against this argument.
Yeah, and I agree with that. I mean, I would say 90% of the time, don't even worry about, use no code, use anything to just get the product in the hands of the customer as soon as possible. But for this startup, I think maybe this could be considered like a mistake or a correct
Right,
decision. But at Business Apps, we literally had to do a full rewrite of the whole
right,
platform, and it took a year. It took a year, and so
right,
I said, maybe we're spending a little bit too much time on the architecture, but I also don't want to be in a position where I have to do a full rewrite, which allows your competitors to catch up for a year. So that was a really painful year when we had to essentially rewrite the entire platform that we had built. So yeah, not doing that this time with
right,
Acquire.com.
right. That makes a lot of sense. Tell us a little bit about what acquire.com looks like today. First of all, maybe let's start quickly with the rebrand. Why did you decide to do that? And are you getting the handle on Twitter or not?
That's a good question. So I'll start with the rebrand. So I'd actually always wanted to be the company name to be acquire.com
Right,
because I've always felt, the best brands in markets win, especially when R&D isn't really necessarily a competitive advantage. And in marketplaces, most of the time it's not. It's really the network effects. Those network effects were created by, usually marketing. Obviously, the product needs to be exceptional, but getting to product parity with marketplaces is pretty easy. So I knew we needed, really strong brand. So I had been in communication with the owner of the domain for maybe 2+ years, and 2 years
wow,
prior, they were asking for the asking price of the domain was $600,000-700,000, and we paid 200,000 in October. So everything's kind of on sale right now, which is nice. But the reason for it was, when you start a business, I'm a big believer. You want to go the more specific as possible.
right,
And micro really helped us kind of say, hey, this is for small startups to begin with.
right,
Maybe we started with sub 500,000 revenue, and we've expanded to 5 million, and then now it's 50 million. And so we've kind of outgrown micro, if you will.
right,
And just through a lot of conversations with different sellers, we kind of came to the conclusion that, we don't want to facilitate micro acquisitions. We want to help maximize acquisitions for founders, whether that's for $10,000 as like a small side project, or, a SaaS business at scale for, $100 million. So dropping the micro has really allowed us to, really show kind of what we're trying to build, which is a marketplace for any size startup to be sold. And then in terms of the Twitter handle, we'll have to see. Twitter is making a handles marketplace where you can bid on the handles, and
oh
it's going
wow,
to
I
be
didn't
on
know
that
that.
mark. Yeah. So we'll see when that gets released. We might not even buy it. It was just part of that secretly was just there was so much brand affinity with microacquire. We needed to create new ways for people to root for our new brand, because I'm a big believer you always want to position your company as David in your market. No one roots for Goliath. And so just kind of complete as the rebrand was happening, we kind of did this rebrand in public, if you will, brought our customers along for the journey, did some funny things, and I saw the Acquire handle was suspended on Twitter. And so we did a lot of things, so like, can we get it? And some of them were funny, some of them were humorous. But it was all, good marketing towards the rebrand that went live, uh, just this year.
Right, right, right. Um, you just mentioned that you are expanding the customer base. I mean, if I may call it, the product base to include startups that may even have $50 million in annual recurring revenue. Now, when you think of companies like these that have this kind of scale, you normally think that they would involve investment bankers and a lot of people in any type of M&A activity. So, how do you see, your role in all of that, and do you think you would replace those kind of institutions at some point, or do you think you would be providing complementary services to what exists today in the market for the exits at this scale?
Yeah, great question. So we actually work with a number of investment banks, business brokers, M&A advisors. So if your startup is of a certain size, we'll actually recommend that we connect you with a M&A advisor within our network. And then on top of that, we have our own, we call it our off-market brokerage service. So we'll actually, uh, run a strategic targeted sale process. If your startup is of a certain size and you're looking for a strategic buyer that's very specific. So we have a number of different options. So uh, another way of what I'm trying to say is, we understand that, you know, investment banks and M&A advisors and business brokers have a key role in the marketplace. And rather than trying to replace them or build something better than them, we want to work with them, and really kind of create kind of like, the Zillow of M&A, where, whatever your startup is, a SaaS, e-commerce, crypto startup, we can facilitate a connection for the best, bank or M&A advisor, based off the needs of your business.
Right, right. I'd love to discuss and touch upon, the future roadmap for Acquire.com. But for now, I'd like to understand how the market has changed in terms of, exit multiples that you're seeing in different domains. Because, you're somebody who has access to a lot of data. You're obviously, facilitating a lot of sales in terms of exits on perhaps a daily basis. So, how have the multiples changed at different levels across different verticals over the last 12 to 18 months?
Yeah, great question. So typically we'll see SaaS businesses sell for 2 to 5 times revenue, or between 5 and 7 times TTM profit. TTM stands for trailing 12 months revenue. So we really haven't seen like a dramatic decline in multiples, if you will. And I think what's actually happened is, 2021, we saw just explosion of multiples, like where, take your revenue times by 100 and that's what you were worth. And I wish that was true, but we've kind of gone back to reality. And so we've actually started to see deals accelerate, because seller expectations and buyer expectations are more in line, and we're not seeing these crazy valuations where it's really hard to price certain assets. We're kind of getting to, like, sellers or founders realize, your business, unfortunately, I'm sorry, it's not worth 100 times your revenue. It's more in line of like 2 to 5 to 6. There's so many factors. Are you growing? Is your churn net negative? But again, like, founders are realizing, this is the true value of my business. In the last 2 years have kind of been a little bubbly. So that's kind of what we're seeing in the market. And then every 6 months we publish a multiples report. The last one we published was in August, so we'll be having another one out pretty soon. But not much has really changed from my vantage point.
Right. And have you seen any specific vertical grow more in the last few months in terms of, exit the activity you're seeing, the M&A activity you're seeing in that?
I would say SaaS, definitely SaaS is kind of our core focus as a business. But we also serve markets like direct to consumer, mobile apps, crypto, even some interesting markets like newsletters or communities.
Right.
Those are always interesting. Um, but definitely SaaS is probably about 70% of the acquisitions we see on acquire.com.
Right. So, I mean, as you know, we're speaking to an audience in Dubai, which is in the Middle East. What have you seen from this part of the world in terms of, people showing interest in buying businesses or selling businesses from the Middle East and North Africa?
Yeah, great question. So we facilitated acquisitions on every continent except for Antarctica.
Right. Okay.
I always joke
That's
about
amazing.
that. We're trying really hard for Antarctica, but we do see activity in all regions of the world. I don't have the stats in front of me,
Right.
but we are active in Europe. We are active in Southeast Asia. We are active in South America. We are active in again every region of the world.
Right. I remember, a few days ago, somebody reached out to me on Twitter. I think they tweeted something, and they tagged me in it, and they were basically asking a question: what's the equivalent of microacquire in the Middle East and North Africa? Do we have something like that? And I said, I mean, microacquire is the microacquire for Middle East and North Africa. I mean, that's what
Yeah,
you keep saying, that you serve different verticals and you serve different markets. You are not just focused on the US as a market or SaaS as a vertical. I've seen you say that a lot of times on Twitter.
yeah. I said that the other day. Someone was saying we need a Latin America microacquire, and then I just remind them, the microacquire for Latin America is microacquire or now acquire.com. But yeah, we are truly a global startup acquisition marketplace.
Right, right. Um, let's talk a little bit about what the future holds for acquire.com. You have built your name for being the place for selling internet businesses, and it's acquire.com is now known for it. Microacquire is the name that comes to mind. It would take some time before people get used to acquire.com. But what's next? I mean, do you plan to expand into more offerings, for example, financing or facilitating financing or anything similar, or what do you plan to do over the next 2 to 3 years?
Yeah, good question. I would say, I think acquire.com has opportunity to potentially help facilitate acquisitions and sales of all types of businesses, not just software companies. So potentially Main Street businesses. And that's kind of where I'd love to see acquire.com go is again, kind of reminiscent of, realtor.com or Zillow, where we're, the Zillow of M&A. So any type of business, whether it's software or, a local small business, I think we can build tools and a buyer network that can help facilitate those types of sales. So that's kind of like our long term vision is being just the marketplace where all businesses are sold. And then the second part I would add to that is, pushing up the deal sizes. So improving the tools that we have. We have tools that help create acquisition legal documents or a simple P&L for software companies. The more that we work on those tools, the larger acquisitions we can facilitate. So I would say just natural expansion into different verticals makes a lot of sense, and then also focusing on increasing the deal sizes so we can facilitate larger acquisitions on acquire.com.
Right, right. That makes a lot of sense. There are two mindsets. One that you build generational companies. You spend a lot of time, on finding the right idea to build, and then you spend your life, maybe your entire life, on building that thing. And then the other mindset is that you build something, you spend some time on it, and you get a quick win out of it. Maybe sell it in 12 to 18 months or 24 months, and if you're lucky, earn a few $1 million. I mean, if you're able to build something substantial. How do you, what are your thoughts on this? If you were to advise somebody to go and build an internet business, what would you tell them?
Yeah, I think it depends on your personal goals. And I think one of the biggest mistakes a lot of founders make is they don't really think about what they really want out of a startup. If it's a couple $1,000,000, like just bootstrap the thing and then sell in a couple years. If obviously there's a lot more to that and it's not as easy as just, yeah, just bootstrap it. But if you raise venture capital, you go on a completely different path. So I always try to, simplify it and, you know, bootstrap if you want to create wealth, and then raise venture capital if you want to disrupt the market. And I think another point to make is, you know, we live in, a time when all you read about is $1 billion exits or these humongous raises. But the reality of entrepreneurship is, that's just the 1.1% that we hear about. The other 99% are just, one, two, three, four, $5 million startups or software companies. So I say, bootstrap if you want to create wealth, and then, you know, if that works out, then raise venture capital, swing for the fences, or go lay on a beach. But be very thoughtful about what you want out of your startup. If it's just a couple $1,000,000, it's much more practical and realistic to avoid raising, venture capital. Just build a profitable software company and then sell it. But if you have larger ambitions and, financials really aren't, your main sort of motivator, then venture capital is the route. But having that kind of discussion with yourself, I think, is critical. And a lot of entrepreneurs just feel that the way you build a startup is you raise money and then you find product market fit, and then you raise more money, and that's just not true. So I'd say just be very intentional about how you finance your company, because that drastically changes the outcome.
I think the last 3 years have been more about, you raise money on deck and then raise more money on another deck, and before even you get to product market fit, you have probably 3 or 4 rounds already done. So we've seen a lot of that, but perhaps not anymore.
Yeah, I mean, the last 2 years I would say were kind of like a big party, amongst tech, and now we're seeing kind of the hangover of
Right,
that.
right.
But it's good because I think it's bringing people back to reality in terms of, what these software companies are trading for, and then more importantly, bringing back sort of the rigor of, it doesn't make sense to spend $2 to make $1. I don't think it
Absolutely.
ever did. But building, real value, I think is, kind of a big shift that I'm excited about.
Absolutely, absolutely. I completely agree with that, and I think it has taken us a lot of time to finally realize that. And I hope the realization stays with us for a long time now. Thank you so much, Andrew. Before we leave, one last question: what's the largest sale that Acquire.com has facilitated to date? I mean, I'm assuming you cannot name names, but I mean, if you can share some details.
Yeah, we've seen several in the low eight figures. I think the largest specifically was a little over 18 million.
Right, amazing.
But we have a few in the pipeline that look like they're going to be closing that are substantially larger than that. So
Wow,
we're excited for
good
the
luck with
future.
that.
Thanks.
Thank you so much, Andrew. It was a pleasure having you, and I really enjoyed the chat. And look forward to seeing more from Acquire.com. And I hope you
Thanks.
get that
Thanks for
handle.
having me. Thanks. I appreciate it. Great chatting with
Thank,
you.
thank you.